Buckle up, market storm brewing. The financial skies are darkening and the winds of change are picking up speed. Hold on to your hats, folks, because the financial world is in for a wild ride. The roller coaster of market volatility is about to take us on a thrilling yet nerve-wracking journey. Experts are sounding the alarm, predicting a stock market crash that could shake the foundations of Wall Street. The very core of our financial system is under threat, and the stakes have never been higher. Get ready for a bumpy ride because things are about to get interesting. But wait, there's more! The twists and turns of this financial saga are just beginning. While stocks plummet, another sector is expected to skyrocket: commodities. This unexpected shift is catching everyone by surprise. That's right, the price of everything from oil and gold to wheat and copper is predicted to go through the roof. These essential resources are becoming the new gold rush. It's a classic case of one man's trash being another man's treasure. And right now, commodities are looking like the treasure chest everyone wants to get their hands on. The rush to secure these valuable assets is on. So, what's driving these dramatic predictions? What underlying factors are causing such a seismic shift in the market landscape? Why are experts so convinced that the stock market is heading for a fall while commodities are poised for a boom? The answers lie in a complex web of economic indicators and global events. Fasten your seatbelts because we're about to dive into the eye of the financial storm and uncover the forces at play. Stay tuned as we navigate through this turbulent financial weather and reveal the secrets behind these bold predictions. Danger signs flashing red. The stock market has been on a tear for years, but like a car running on fumes, it's only a matter of time before it runs out of steam. Inflation is soaring. Interest rates are climbing and the global economy is showing signs of weakness. These are all major red flags that have experts worried. Think of it like a game of musical chairs. When the music stops, everyone scrambles for a seat. In this case, the music is cheap money, and those seats are safe investments. The problem is the Federal Reserve is raising interest rates, which means the music is slowing down, and soon there won't be enough chairs to go around. When that happens, investors panic. They sell their stocks, driving prices down further. It's a vicious cycle that can quickly spiral out of control. This is why experts are so concerned about the current market conditions. Inflation explodes, stocks exposed. Inflation is the silent killer of stock market returns. When prices rise, it eats away at the value of your investments. Think about it. If a stock goes up 10% but inflation is running at 7%, you're only really making 3%. That's not a recipe for getting rich. And right now, inflation is running hotter than it has in decades. The cost of everything from groceries to gasoline is skyrocketing, putting a strain on consumers and businesses alike. This is a major reason why experts are bearish on stocks. When inflation is high, companies face higher costs for raw materials, labor, and transportation. These costs are often passed on to consumers in the form of higher prices, but there's a limit to how much consumers are willing to pay. This squeeze on corporate profits can lead to lower stock prices. The safe haven? So, if stocks are so risky, where should investors turn? Many experts believe that commodities offer a safe haven in times of economic uncertainty. Commodities are raw materials that are essential for the production of goods and services. Think oil, gold, copper, wheat, and corn. Unlike stocks, which can be influenced by a wide range of factors, commodities are driven by supply and demand. When demand is high and supply is low, prices go up. And right now, demand for commodities is soaring, driven by factors like population growth, infrastructure spending, and the transition to renewable energy. This surge in demand, coupled with ongoing supply chain disruptions and geopolitical instability, has created the perfect storm for a commodity boom. Investors are taking notice, pouring money into commodities as a hedge against inflation and a potential stock market crash. History repeats itself, remembering past crashes. Those who cannot remember the past are condemned to repeat it. This famous quote by philosopher George Santayana holds especially true in the world of finance. The stock market has a long and storied history, and unfortunately crashes are a recurring theme. These events have shaped the financial landscape and influenced countless investment strategies. From the Great Depression to the dot-com bubble to the 2008 financial crisis, time and again, we've seen markets soar to unsustainable heights, only to come crashing down to earth. Each crash left a lasting impact on the economy and investors alike. In each of these cases, there were warning signs that were ignored or dismissed. Analysts and experts often sounded alarms, but the euphoria of rising markets drowned out their voices. Investors got caught up in the hype, believing that the good times would never end. The allure of quick profits and the fear of missing out drove irrational exuberance. But as we all know, what goes up must come down. The inevitable correction often comes swiftly and brutally, catching many off guard. The laws of gravity apply to the stock market just as they do to everything else. No market can defy these fundamental principles indefinitely. By studying past crashes, we can learn valuable lessons about the risks of speculation, the importance of diversification, and the need to stay disciplined in our investing approach. These lessons are crucial for building a resilient investment strategy. History may not repeat itself exactly, but it often rhymes. By understanding these patterns, we can better prepare for the future and navigate the complexities of the financial markets with greater confidence. Gold rush of the modern age. Gold has long been considered a safe haven asset, a store of value in times of uncertainty. When the economy is shaky, investors flock to gold, driving up its price. And right now, with inflation raging and the stock market looking vulnerable, gold is shining brighter than ever. But gold isn't the only commodity that's attracting attention. Oil prices are surging due to geopolitical tensions and increasing demand. Copper, a key component in renewable energy technologies, is also in high demand. And agricultural commodities like wheat and corn are seeing price spikes due to supply chain disruptions and the war in Ukraine. This broad-based commodity boom is a clear indication that investors are bracing for a period of economic turbulence. They're seeking out tangible assets that are less correlated to the stock market and offer a hedge against inflation. Expert opinions, what they're saying, don't just take my word for it. Listen to the experts who have been analyzing these trends for years. Top economists and market analysts are also sounding the alarm about a potential stock market crash and a commodity boom. These professionals have a deep understanding of market dynamics and their insights are invaluable. Here's what some of the brightest minds on Wall Street are saying. We're in the late stages of a long-term debt cycle, and history shows that these cycles often end with a debt crisis and a market crash. Ray Dalio, founder of Bridgewater Associates, one of the world's largest hedge funds. His perspective is shaped by decades of experience in the financial industry. The Federal Reserve is trapped in a difficult position. They have to raise interest rates to fight inflation, but doing so risks triggering a recession and a stock market correction. Mohamed El-Erian, Chief Economic Advisor at Alliance, a global financial services company. His analysis highlights the delicate balance the Fed must maintain. Commodities are the best asset class to own in an inflationary environment. They provide a tangible hedge against the devaluation of currency. They offer a real hedge against rising prices. Jeffrey Gundlach, CEO of DoubleLine Capital, a leading investment management firm. His insights are particularly relevant in today's economic climate. Don't panic, prepare. It's important to remember that market predictions are just that, predictions. No one has a crystal ball, and there's no guarantee that a stock market crash will happen. However, the warning signs are there, and it's always better to be safe than sorry. The key is to stay informed, stay disciplined, and stay diversified. Don't panic, but do take steps to protect your portfolio from a potential downturn. This could include rebalancing your portfolio. If you're heavily invested in stocks, consider reducing your exposure and allocating more to bonds, commodities, or other asset classes that tend to perform well during market downturns. Raising cash. Having some cash on hand gives you flexibility to buy stocks if the market declines and provides a buffer against losses. Reviewing your risk tolerance. Make sure your investment portfolio aligns with your risk tolerance and time horizon. Your portfolio. Time for a checkup. Just like you wouldn't skip a checkup with your doctor, it's important to regularly review and adjust your investment portfolio. Are you overexposed to risky assets? Do you have enough diversification? Are your investments aligned with your long-term goals? Now is the perfect time to schedule a financial checkup with a trusted financial advisor. They can help you assess your current financial situation, identify potential risks and opportunities, and develop a personalized investment plan that meets your specific needs. Remember, investing is a marathon, not a sprint. By staying informed, staying disciplined, and seeking professional guidance, you can weather any market storm and achieve your long-term financial goals. Share your thoughts. What do you think about the possibility of a stock market crash and a commodity boom? Are you taking any steps to prepare your portfolio? Share your thoughts and insights in the comments section below. I'm always interested in hearing from my viewers and readers. Your comments and questions help me stay informed and provide the most relevant and timely financial insights. Let's keep the conversation going.